Hello, welcome, and today I'm going to talk about some insights into the suspension of property funds, a hot topic over the last 3 months for certain. I've had a number of questions over the last few months, ranging from, what does it mean, to is it another is it a really bad situation with another fund manager that's gone bust? Will it ever come back? Or will the property market ever return? What's the future for commercial property? Should we be allocating extra money into other resources instead of property, and that going out of favour? So I thought, well, let's speak to the horse's mouth. Let's get some insights and some real stories as to what's going on, and just give you some truths behind some of these myths. So I'm going to start really with some growth statistics from property, and take you back to the 1990s. And the growth for that year was around 31.7%. In 2001, we saw growth at around 26%. In 2007, we still got 25%, but bang, 2020, we're at minus 3.1. And that's really unsettling the market and giving cause for all of these questions. So why has it actually happened? Well, we all know about lockdown in March 2020, but the FCA, who are the regulators for funds within the investment world, said that they don't want these funds trading when they don't know what the valuations are. It's nothing to do with the liquidity of the funds. Maybe with some funds it is. So when somebody wants their money out of a fund, when the market is coming down, people get nervous and they want that cash out of that falling fund. Property is the one fund that has a mandate which will allow them to close the doors for trading because of a liquidity problem. However, in this situation, it's not really down to liquidity, but another thing. And the FCA has said that funds have to suspend because more than 20% of their assets are directly invested in property. And the FCA, they don't believe that the valuers can value the units correctly. So when there's material uncertainty over the value of those units and there is disbelief in a true valuation, then the FCA have requested that those funds stop trading. So then we take the next step onto that, which is really about the fund and the subject of uncertainty. So how do we get out of here? Well, uncertainty really is around a number of sectors within the property market. We've got industrial sectors and supermarkets, and right now those two sectors, they're not uncertain, so they can trade. However, if you've got a property fund that's invested in or different types of properties, then as a whole unit they still won't be able to trade. It's hopeful that offices, which will be the next sector to be released, will then have the go-ahead to be released and start trading. The final piece will be in shopping centres, and that could take a lot longer for them to be reopened. So I had a conversation with one of the funds that we're invested in within our portfolios, and that fund manager, they are still doing deals. They're still making trades, they're still letting offices on industrial and retail units. So that was really positive news. So we then looked at how their fund is actually positioned. And the fund I'm going to have the call with was BMO. 23% of their portfolio is in cash, so no problems there whatsoever. They're using those cash reserves to refurbish the properties, add value to those existing assets, and look after them. 30% is in industrial. That's, as I said, not uncertain anymore. Money is flowing. It's flowing into the industrial sector, places like deliveries and supermarkets. Next bulk of their portfolio is 24% in offices. They're quite resilient, as they find, and I'll come on to some figures momentarily. And another 17% is in retail, which is split into supermarkets, essential goods and services, and then the final piece, about 9%, in Argos, TK Maxx and the like, which is the retail sector. So when the offices can be revalued properly, they're expecting the fund to be reopened. I said, when do you expect that to be? And I had an answer, I think something like, when I know I'm going to being able to get my hair cut. So coming back and then just recapping on that, any fund that has less than 20% of uncertain property holdings can then reopen and trade. So in the situation of a property fund meeting that criteria, they will be unsuspended and open for trading. Just because one will meet the criteria does not mean that all property funds will meet the criteria straight away. So it will be on a fund by fund. Then looking deeper into BMO property portfolio, their risk profile, if we use a simple rule of thumb of low, medium and high, we've got 84% in low, 6% in medium and 10% in high risk. So again, giving them a lot more security and lower volatility in their portfolio of properties, and likely to be one of the first horses out of the gates. Rental, they've collected something in the order of 84% of their rents are still being collected, and they want to support their tenants in the buildings during these hard times, so they're negotiating contracts with them to ensure that the tenants are supported. So, concluding then, the future of the commercial offices, a lot of people say, well, you know, people are working from home, so they don't need the offices anymore. Then commercial property is not in favour any longer, so really what's the future for that? But the forecasters are predicting positive returns between 21 and 24. Main reason being that, you know, the cost of offices is a damn sight less than the whole team. And a team, I don't know how long you've spent on a Zoom call, but my longest Zoom call has been something like 7 hours. Yes, we had a few breaks, thank goodness, but it's intense. It's really, really intense, and I couldn't do it all day long. So we need, I think, areas for collaboration, for ideas, certainly need it for training, for investing in new people in our working environment, and you just can't do that on Zoom. So I think there is a place for offices and for the future, but maybe a change of use where some companies want to plug and play, they just want to go in with a smaller area with a let office and use it for different purposes. And then finally, the retail sector. Yes, they have got a lot of problems, and I think people during this period have created new habits of shopping, such as shopping online, using the internet. You may not have bought anything, any food or groceries online, and maybe this is your first experience of doing so. And when you get that new habit, that might be something that you embrace going forward. A few figures for the property funds for you. In the last month, we're looking at minus numbers, minus 0.87. In 3 months, minus 3 or minus 4%. But in 5 years, we're looking at positive figures at 12% and up to 24%, depending on the risk within that property fund. So hope that's given you some insights and demystified some of those myths. Thank you.